throw the gear on, rush out there, hop on the truck, sirens are on. Like, this is the coolest thing I've ever thought to do. Again, thrown right into it. Episode 13, Mortgage Daddies. Back to just you and me. I'm tired of all those guests.
Full effect. Those guests, they were great.
We had some great ones. Honestly, they all were, in their own way. Everybody does things a little bit differently. Everybody kind of has their own style, but everyone just pretty much at the end of the day, hard work, dedication, and success comes after that,
I think my favorite one was the Ricardos. Those guys coming on, being able to handle. Story. It's an incredible story. Yeah. The fact that they have 5 kids, from what one was going into high school, all the way down to 3.5 years old, dirt bike riding, hockey parents, Jay Kudo, everything he does over there, Kudo Construction, Cam
with his fitness stuff. I think that was great. That
Mike Ricardo lost 50 pounds.
I know.
Working out with him.
Yeah, that's crazy.
We need to get on that.
We've said that. We need to.
Let's just start off with some Jenga before we
next time.
Yeah, before we want to start off at the gym.
All right, go ahead.
Let's pull one of these.
There we go.
All right, we're not going to take them off the top like some of our other guests.
Cheater.
Oh, this is a good one for you, Craig. I like this.
Okay.
I'm actually curious because we've never actually had this conversation. Who is your celebrity crush?
Oh, I'm the worst at remembering things, but celebrity crush. Growing up, when I was a kid, I'd probably say like a Jessica Alba or Jessica Biel, one of those two. It was big in the Jessicas. Jessica Simpson when I was really young, so she got booed. Who else? I don't know. Now it's kind of tough. I don't really pay attention. There was, you know what? It's probably best just unsaid, honestly.
I think it's probably better that way.
Yeah, this when I was a kid. Now just, my wife. That's it.
Yeah. No, my wife has definitely been my celebrity crush. But for everybody watching, this is going to be, this might get the top views of all time, just this one little 15 seconds, because my wife still makes fun of me for it. It might be Shania Twain, like when she came out. Oh, yeah, she's a little country singer. Well, now she's probably in her mid-50s, but,
So your age.
Yeah. She helped me get through some tough times in my life, for sure.
Just listen to this Shania Twain, depressed.
She looked pretty good.
Heaters driving around in like an old Camry. I could just picture it now. I don't know if any of that's true.
The fact that I had a Camry, too.
Yeah.
I can't.
Shania Twain, all right.
Let's your pull. Shania Twain. Wow.
Do like exercise and get up over.
What happens when this thing just collapses on us?
They just rebuild it every time because they always knock it over when we when they're setting up. Do you think the moon landing was fake?
No. I have no reason to think that would be fake.
I'm not a big conspiracy person. I would say no. This seems pretty real to me.
It seems pretty crazy that somebody would just fake that.
I think it's pretty crazy that people want to actually go and try to do that. The amount of people that have made it and come back are very few compared to the amount that have died on their way up there or on their way back.
Like, what do you do when you get there?
I don't really want to see the moon that time. I'm not going to lie. Like, cameras and telescopes and everything are, like, super strong. I feel like I'm little, VR. There's no reason to go back up there.
No, absolutely not.
Dangerous.
How about these people trying to go to different planets? That's their goal.
I get it if we kind of destroy this one, which we're on the case for. But I'll let somebody else kind of set that up. I'll hold down the fort here, and then maybe I'll be the last one there.
Well, now we got through some Jenga and some celebrity wish lists, and who was.
I'm waiting for some better questions. I think they need to start.
You know what? Let's try one more. There's got to be something better.
There's something better? Right in the middle, maybe?
I'm going to keep going.
I swear to God, this was not picked. Have you ever peed in the pool?
Oh, boy.
Remember, our kids are going to watch this.
Like in your pool or in a pool? Because yes, both.
Yeah. Anybody that's in this room or watching this that says they have never peed in a pool.
It's the worst to have to get up out of there. It's cold out. The water's warm.
You're comfortable.
You buy extra chemicals for a reason, honestly.
100% why I shocked the shit out of my pool after a 4th of July party.
You should really, before one of those parties, buy a chemical that turns a different color when people do. That would be hilarious.
The whole pool would just be that color.
Yeah, well, by the end of it.
100%.
But this
100%.
first person that does it really is going to get it.
You know, there's going to be like 3 people who watch this that are like, I've never peed in a pool.
Yeah, they're going to think we're weird and gross, but honestly, it's them.
I agree with you. It's got 30,000 gallons. It's going to dilute.
What's the difference between peeing in the ocean?
Yeah.
I mean, probably a lot more water. But...
Probably a little bit
I'd
better.
rather go in a pool. I'm not a big ocean guy. Like, I like being on the ocean in a boat, but I don't really like little creatures coming at
No.
me. Matoozies.
No, absolutely not.
Tootsies. You got to keep them safe.
So there's been a lot of stuff going on in the market the last couple of weeks. Interest rates, the NAR settlement, inflation,
Assassination attempts.
We don't get a lot of time to sit down and talk about, where we think the business is. Like, where do you think interest rates are going to go for the viewers that are watching this that really come on here to see the mortgage daddies talk about mortgages more times than not? We're talking to guests and getting to know their stories. But what do you think the market looks like in the next 6 months?
I think in the next 6 months, or maybe just after 6 months, is when you're really going to start to see the market shift with the rates.
Yeah.
From what I hear, I focus a lot on mortgages, but not so much on what the market's going to do, because I try to stay more in the present. Like, if rates are at 8% tomorrow or 5% tomorrow, that doesn't necessarily really change what I do. I'm here to really help the consumer get a mortgage that fits them, make sure they're well qualified, make sure that they understand the process. Rates are going to go up and down. So I don't really try to spend a ton of time worrying about what the market's going to do, because I find that either you get depressed thinking about that, or you start blaming things, I'm going to wait. I do think it is going to get better.
Yeah.
I think that it'll be great for our industry, because even, picking up a handful of refinances every month is going to help everybody out. It's been tough for everybody, in this business the last probably year and a half or so. I mean, a lot of people have left the business. A lot of people are kind of trying to survive right now and get through it, because it's tough unless you had a boatload of purchase business stacked up, or you have a lot of realtors, which luckily we've been able to do that. It's been tough. So I think the rates will get better. Hopefully, I would say I would see them in the fives. I think is probably going to be what you're going to see.
12 to 18 month span.
Yeah, would be my guess. I mean, but
who knows?
The people that are also telling these things, just for the viewers out there, I mean, they also expected and predicted the rates to get better a little while ago, or for them not to go up so fast, or what. The consistency of the information is not always the best, but I think we're actually moving in the right direction at this point.
So I mean, with that being said, you just basically summed up my next question. We have a lot of viewers that are first-time home buyers. They're brand new to this. They're nervous about buying. When is a good time to buy? Do you think they should sit on the sidelines, wait for the spring market, wait for the interest rates to hit 6.25 or 5.75? Where do you stand on that?
I get that question a lot, and I would say, for the people that really know me, they know that I'm not a really pushy person. I'm not I don't think we're really selling something. I think we're providing a service, right? So if it's right for you to buy, I'm going to be here to help you. I really do personally think that it is a good time to buy, because in my honest opinion, I think that when rates get better, it's just going to make the prices of the houses even higher. And you could buy now, have a little bit of a higher rate than maybe you want, or maybe what it's going to be in 6 months, but you can always refinance it. You can't go back, and I've said this now for quite a while, but you can't go back 6 months and pay what you paid for the house 6 months ago or a year ago, but you can always refinance. You can't change what that purchase price number is. So the longer you wait, the price of those houses just keep going up, where you can always refinance, depending on what type of loan, usually 6 months, to a year, depending on what you want to do, you can refinance that. So I wouldn't personally wait if it was me. Like, if I really wanted to buy a house, whether it was an investment property or whether it was my first time buying, I think the longer you wait, the harder you're making it on yourselves personally.
Yeah. So to piggyback that, with interest rates where they are, I'm starting to see a lot more applications come in where people have more credit card debt. And now I'm starting to really see, 10, 12 years ago, even 5 years ago, you'd see 20, 40, $35,000 worth of credit card debt. I'm starting to see a lot of credit reports coming in with 70, 80,000. Where do you advise them to maybe look at the equity and paying off, their credit card debt? Let's say they have, just for even numbers, $100,000 worth of credit card debt. if you spread that out over and you roll it into your mortgage, it's about $700 a month. I was just running that scenario for somebody. But if you look at what they're saving per month, it was like $1,400. Do you advise your clients to maybe look at a home equity loan, consolidate their first and the second if they do have an interest rate of 3.75?
My suggestion on that and how I always feel is do it before it's too late.
Yeah.
Because there's nothing worse than, and I've had this happen a bunch of times, where somebody calls you because they have been holding out because they don't want to give up their 3% interest rate or their 4% interest rate, but they are accumulating so much debt with whatever, if it's bad money management, something's happened, had a baby, whatever the reason is, and they're holding off, and now they start missing payments. Credit starts going down. My suggestion is whether it's a home equity line or it's a cash out refinance or a fixed second, do something before it's too late, because you have probably the most equity you've ever had in your property right now. Yeah. Probably in all of time, properties are worth the most now than they've ever been. So no matter when you bought the house, you have some sort of equity in it. I would highly advise trying to, even if you don't necessarily need the money right now, put a home equity line on your house.
I tell people that all the time.
Have it sit there. I was just at a wedding this weekend. Well, this is probably going to air in a week or so, but I was just at a wedding, and I was talking to a doctor that I used to see at the hospital when I was working in Fall River as a paramedic, and a nurse. They ended up marrying. I think they got married to each other, or they're together now. And they were kind of asking me the same question. This is a doctor, and this is a nurse who's been a nurse for 20-something years, and a doctor in the ER. And they're asking me that question. I'm like, yeah, absolutely. Go put it on. It doesn't really cost you anything to do it. Go have it there. If anything happens, maybe a second home picks up, maybe depending on where rates are and everything, you want to do some work to the house, have something on there. But if you do have the debt, and that's when I would suggest a home equity line.
Yeah.
If you do have the debt already and you're going to start paying on it right away, well, now you want to kind of look more at the numbers and see what makes sense. What's your rate going to be on a cash out compared to, kind of what that blended rate we call it is. What makes the most sense. But if you don't have any debt and you just want to have like some protection, go get a home equity line. If you know you're going to be pulling out, X number of dollars, run the numbers, see what makes the most sense, because the thing, I guess this is kind of like my thought on pricing wise, that a lot of people don't think about is at some point you're going to pay, if you're going to combine them together, or you're going to pull the money out of the property, you're going to pay that hit to have a cash out. So pulling money out on a property, you have a higher interest rate than if you just do what's called a rate and term refinance. So you're just refinancing the money you already own the property. When you have two separate loans, if you didn't take those loans out at the same time, you're going to have to put them together. Or if you're pulling money out of the property, it's a cash out. The interest rate's higher. My suggestion is if the numbers, because rates are predicted to go down, if the number's not too much different than what it would be monthly to have a second and leave your original mortgage at the lower rate and you put them together, even if it's like a $50 or $100 more, I personally would take the cash out option, because now in 6 months or a year when the rates go down, now I'm rate and terming that, and now the interest rate's even better. That's now awesome. I'm not going to have to do that again. So depending on the numbers, but that's something that not a lot of people think about. But the interest rate's higher. I mean, depending on the equity you have too, doing a cash out can be a lot higher of an interest rate than doing a rate and term refinance.
I joke around with people all the time. They're like, I'm just going to go to an equity line. I'm like, you have like $80,000 worth of credit card debt.
It's high.
And it's usually 1%, right? So if you borrowed $80,000, 1%, that's $800 a month.
It's probably getting higher than that. I mean, we don't do a ton of them.
It's nuts.
They got to be getting higher than that. Some of these banks are 10, 11%, on it, where if you're going to be pulling that money out, maybe look at doing something a little bit different. But it's not a bad idea to have one. I think everybody should have.
Everybody should have a home equity line. I think when you first started, that's what I would tell everybody. I'm like, if you just go get a home equity line, because bad things happen to good people all the time. I would say that to all my clients. I'm like, it costs you maybe $500 to do the equity line at your local bank.
No, most of the time, it's
nothing.
Doesn't cost that much. I have one on every single property I own.
Yeah, just in case.
Just in case.
You never know. Like,
want to do something. Want to buy another house. Want to do
home improvements.
A pool. Want to do siding on the house. I mean, stuff's expensive.
Yeah.
People. You could try to do stuff yourself. I mean, I've always struggled with that, where I'm like, oh, I could do this. Why pay somebody? But I don't really do that anymore.
And then after about 10
I
minutes of
get so
thinking like that.
frustrated. The project gets about 75% done. I yell at Emily a couple times, and just then you end up finding somebody to
Yeah.
finish it.
It's cheaper just to pay somebody on your relationship.
Yeah, but it's nice when you have that equity. It takes a long time for somebody to save up $100,000. I don't care what you do. It takes a long time.
Especially when they make $150,000
Yeah,
a year.
things
That's
are
the
only
part I don't.
becoming more and more expensive.
I agree.
So it takes a long time to do that. And you could save up for so long. And even the conversation, I guess, sticks too for like when somebody's looking to buy a house, how much money they should put down. It takes a long time to save up that much money. Do you really want to tie up all that money in the property or in whatever you're doing? Or depending on what your goals are, maybe it makes a little more sense to just put 5% down instead of 20. The mortgage insurance isn't going to be that expensive if you have good credit. Save that money to do something else with it, buy another property, do an addition, do renovations, whatever, because it's always harder to pull that money out of the property, or you're going to pay to do it.
You're going to pay a premium. And then does it really make sense at that point to pull it back out of the property? Probably not.
Yeah, I mean,
more times than not.
It's tough. I mean, I always try to put as least down when I buy something so that I have as much capital as possible to do something else. Money starts going quick, and having those home equity lines there as a backup is always nice.
Yeah. I mean, for all the hundreds of thousands of viewers that are watching this, I'm quite sure millions of viewers out there. One of the things I've been telling a lot of my clients that are calling me, hey, is it a good time to refinance? You think I should refinance? I'm at 3.5, and I'm telling them, take the cash out now, pay the premium. While the rates are still where they are, you're not going to want to wait till the rates hit 5.75, take the cash out, and then try to chase the rate and term game. So I'm glad you brought that up. That's a great point.
Yeah, and too, like on that, a lot of times when people do have that much debt and they're paying it off, their credit suffered because of that.
Yeah.
So maybe it makes more sense to do an FHA loan to pull it out, or a conventional, pay the higher premium, and now pay your debt off. Your credit's going to go up. Now you're really benefiting when you go to do a rate and term because you don't have that cash out hit anymore. Your credit's not 660 or 620 anymore. Now it's 800.
Yeah.
There's a massive, depending on the equity you have in the property, there's a massive difference in what your interest rate's going to be if you have a 660 cash out versus a 800, rate and term refinance. You're looking over multiple points worth of adjustments and what that could cost you.
I think one of the things we haven't talked about on Mortgage Daddies is the array of products that we have, right? So we had a training last week or the week before where we got the entire company together on a quarterly meeting, and it's just wild to me, right? How many different investors that we deal with, and I don't think a lot of people, I know we touched on this in one of the previous episodes, what's the difference between, acting as a mortgage broker as opposed to somebody going into their local savings bank? And I really, really hit home last week when we were in the meeting is just the amount of like non-QM, the DSCR loans where we had the investors and the account executives come in from those institutions. Can you touch on some of those where you see your clients really benefit and what those clients look like? Are they investors?
So on the non-QM side of things, probably the two most popular loans are a DSCR loan or a bank statement only loan.
And what does DSCR stand for?
Debt service coverage ratio.
How does that work?
What pretty much has to happen is, and depending on how much it covers, depends on what your rate is, but it's for investment loans. So you can't buy a primary residence with this type of loan, but this is for an investor. Somebody that wants to buy another property, has the capital to do it, meaning they have enough money for the down payment and the reserves, but maybe doesn't have enough income because they're self-employed. Don't want to show
all the money
all the time. You don't want to show the income that you need because you don't want to pay the taxes on it, but then it hurts you when you want to try to buy something. Or maybe you just bought another property, and it's not cash flowing enough for what it needs, or you just bought a new car. There's numerous reasons as to why it was a bad year, down year for your business, or you're trying to grow it, so you've invested a lot of money back into it, and you don't have the money on paper that you need to buy the house. Well, with a DSCR loan, what you make doesn't matter. How many properties you own. There's some limits with some of the investors, but a lot of like the normal things that you would think about don't come into play. You could own 10 properties. You could show a loss on every single one in your taxes. You could be self-employed, showing $5,000 a year, and you could buy another property.
As long as you have the
because
down payment.
You have, most of them are 25% down. There's some that go a little bit lower and some that go a little higher depending on the amount of units and everything. Also, your own credit score always comes into play with a lot of these programs. But really what it is it's a commercial loan.
Yeah.
So how do commercial loans qualify? the property offsets itself with the rents. Now, it's not what the rent is on that specific property at that day, because a lot of times when someone's selling a property, they're not getting what actual market rent is. So these investors that we have will allow you to use market rent. If there are leases and they work, they'll use that as well. But they'll allow you to use market rents to show that, hey, this property will cash flow, or at least pay for itself. You're putting down 25%. The rents are going to offset what the mortgage payment is. There's no real liability here for us. There you go. Move on. Another one, another one, another one. So we see a ton of people who are pulling money out of properties that they have with these loans. Because
so you can use it as a refinance.
You can refinance with these loans. And so many people, it's tough. I always sit there and I talk to a lot of people who buy one, they want to buy another, and their goal, I'm like, hey, you got to make sure you show enough on your taxes.
Yeah.
Because it's real. The accountants are always working in the way to save you money on your taxes, but that doesn't always help you with your goals in life if you want to buy more properties. So if you go and you show a loss on these properties that you own, maybe it's a $300 loss here. Now you have another property, another $400 loss, another property, $500 loss. Oh, you have a new truck because you got all these properties now, so you got to drive something cool around to your properties, to maintain them. So now you got a $1,500 truck payment because these things are like $100,000 now.
Yeah, it's crazy.
How much money do you make?
Yeah.
But you've saved, you got equity in your properties, you're able to use that. But now you can't physically afford these properties on paper with a traditional mortgage.
Yeah.
So these loans let you qualify with them, which is great. Bank statement only loans are big too for people who are self-employed. Same thing. Don't show enough income on paper, but there's enough deposits. So you look back usually 12 to 24 months in the business bank statements. They have to be business bank statements. Look back, the deposits in. There's a ratio factor depending on what type of business you have, how many employees you have, things like that. Oh my God, the amount of income that you give, because these businesses really have
crazy.
If you're a business owner out there and you're listening to this, you know how it is. You might show $40,000 on your taxes, but really you spent probably $200,000 in other ways.
Miscellaneous.
So that income now gets to be used for you to qualify. And those are programs that most banks don't have.
Yeah.
One, two, most places can't get it done that fast.
Yeah.
We have, which is, when she was up there talking the other day, it's true. And the ones that I've always used too, it's not the investors, like the normal investors that we have that also have non-QM stuff. I don't use them because that's not what they specialize in. Just like I've said before, and I've said so many times, is like, you call me when you want a mortgage. Don't call me when you want an auto loan. I don't do everything. I do mortgages. I specialize in one thing. These companies that we have, they only specialize in non-QM loans.
Yeah.
So they're not doing an FHA loan. You can't call them and buy a primary residence with these guys. They are straight just for investors, and that's all they do. So their speed, their knowledge, how they work the deals.
They do it amazing.
I've tried other ones before. Like before we had as many options, it was hell to try to go through it. The stuff they would ask for, these investors we have, it's a couple documents that you're going to need. It's easy. Appraisal comes in. Boom, boom, done. Move on to the next one.
Yeah. I mean, to that point, to go the opposite way is I feel like with our marketing at Milestone, it just got so much better over the last 12 to 18 months. Our partnership with a local bank, we're able to offer, a lot of different products that even mortgage brokers aren't, they don't have full access to. In regards to, I just talked to you about a land loan this morning. So we're doing land loans, new construction to permanent. I think it's just really important to get out the message that, give us a call. There's not a loan on the residential side or even now on the commercial side. Like those investor loans, I think, Steve was talking about doing an 8-unit, 9-unit on a property with a DSCR loan. The rent offset the payment and you're approved.
A lot of, with a lot of that stuff, in my opinion, it's nice when you can call one place. Like if you go for an auto loan, everybody is always so worried about their credit getting run because these guys will run their credit with a bunch of different banks because every bank you call, they need to pull their credit for that specific bank. You don't need to do that when you call us. We can do a soft check on your credit most of the time and figure out where you're at before you even have to do a hard pull on your credit. But even if we have to do a hard pull, that one hard pull is good for any of the investors that we work with. So we're not re-pulling your credit because, today pricing's better at this bank. Oh, pricing's better at that bank. Oh, you want to do this program. We have to re-pull your credit. No, it's one time. We have everything. And then down the line, as you evolve and you do other things, like we already have all your stuff. We already have your updated documents. We get so much repeat business because, in my opinion, one, the knowledge that we give people is probably up there, compared to a lot of people in this business are either newer or they work at banks and they just don't really care to spend as much time trying to inform the buyers on what they should do. You know, hey, you're pre-approved.
Yeah.
Here you go. That's
You know how
why I
that
got
goes.
into this business, because I talked to you, and I had talked originally with somebody else, and I'm like, this person didn't tell me anything. What do you want to get approved for? 350. Okay, here you go. That was it. That was the end of the conversation. Never called that guy back.
Yeah.
And when I got into this, I'm like, I am not going to do that.
Yeah.
I'm going to rattle my ass off for 30, 45 minutes going over it with somebody that's a first-time home buyer, because they need to get that information. And you're not going to get that information if you just pick up the phone and call anybody.
Can't agree more with you there.
It's I think really, I mean, besides all the products and programs and the pricing that we have, the reason why people call us is because of the knowledge, the speed. The other thing with those DSCR loans, what commercial lender can close a loan in under 30 days? Most of the time, they're not even ordering an appraisal for 60.
Yeah, it's
90.
Bizarre to me how long.
Because they won't order an appraisal on the commercial side most of the time, and I know this because my dad was selling a commercial property once, and he was like months, extensions and months and whatever. Things got pushed down, and he was selling it, and he was waiting, and he's like, "Oh, okay, we're gonna do the appraisal." He's like, "If done the appraisal yet, it's been like 90 days," because banks are slow and commercial loans operate differently.
Yeah.
We can do a 5-family, a 6-family, or traditional 4 or less most of the time in under 30 days.
Yeah.
When you're putting an offer in, it's super competitive out there. Even if you're looking at 5 families, 6 families, it's still super competitive. When you can increase your time that you can close, which really takes more of a risk off the seller, because now they don't have to worry about waiting 60 days or 90 days to figure out if you can actually buy this house, it really helps you win that bid most of the time.
Which is insane. So one of the things I know you don't like talking about is just the sheer amount of volume that you put through your pipeline on a monthly basis, yearly basis, over the course of, like, I would like to call it your short career, right? Now you're 5 years in, which now you're really turning into like one of the OGs in the business, because you see so many people come in, they stay through a cycle, and then they're back out to doing whatever they did before. You're stuck here now, right? You're 5 years. It's really hard to get out of this business. I think I would have gotten out after 5 years, but you just can't. I know you love what you do. It's kudos to you. I know you just, last year you celebrated over 1,000 units closed. That means you've helped over 1,000 homeowners either, refinance their house or purchase their house. I would say about 85-90% of your business has always been purchase. Those are stats that just are amazing to me because of how the longevity I've had in it. I talked to some of the older guys in the office, and we're all just dumbfounded by the just sheer amount of loans that you're able to close and communicate effectively with your clients and really educate them. But that's one of the strong suits that you have, as being Craig Snell, one of the original mortgage daddies in this game. My question is, does it ever get tiring? Right? Like, sometimes I'm on the phone, it's 8:30 at night, and I got, a real estate agent calling me, and I'm like, I just don't want to do this anymore. Like, do you ever have those days? Because I look at the phone now because I'm old and I've been doing this for a minute, and I'm like, what would Craig do? And then I'm like, damn.
It can get a little tiring, just because I think in anything in life there's ups and downs where you could have a great week, you get 5 contracts accepted, you pre-approve a bunch of people, everyone's credit's good, they qualify, and it's super great. And then you have other weeks where you feel like you're just getting beaten up, left and right. Deals are falling apart because of appraisal issues, or borrowers lost their job, or you try to pre-approve a bunch of people, you do all that work, and unfortunately they're not ready to buy yet. But it definitely can wear on you. But then you get those calls and you talk to that person and you just like get into your groove,
Yeah.
and I really feel like I get into this groove when I start talking to buyers. Like, that's my favorite part to do. Like, looking at the file, figuring out, making it work, that's so much fun too. But really, like, when you get on the phone with somebody and you can hear that they're listening and they're taking that information in and they're understanding it. Maybe they're not understanding all of it, but they're like, and then you get the, wow, I have been pre-approved by other people before, or I have talked to other people and nobody has ever given me this kind of information before. Like, thank you so much. Or they call the realtor that referred you to them to talk and to thank them for referring them. That's what's like gets the juices going. You're like, all right, I'm glad I keep doing this. On to the next, because that's like where the appreciation comes from. The loans closing is great, but like I'm always been like on the front end of things so much. Like I really do watch my pipeline a lot more than you want me to, really, but because I just can't get out of it. And some buyers you just are always going to have that more communication. Like they want to talk to you more. They don't take the processing as well for whatever reason. So that you still stay involved. But those clients are like your clients for life.
Yeah.
They're texting you after, they're thanking you. They're inviting me over for dinner because you were such a massive part of, and that's not every client. So like when you get those ones and you get that still, that's like really what keeps me going and like stops me from getting so annoyed, I guess you could say, because it can get a little, you just like in any business. I mean,
get burnt out.
I was like that when I was at the fire department. Like I was just getting burnt. When I first started, I was like, oh, call, let's go. I'm ready to go. Like throw the gear on, rush out there, hop on the truck, sirens are on. Like this is the coolest thing I've ever thought to do. And then over time, I'm like, this isn't really cool anymore. Like I am really tired of dealing with these people. But then every once in a while, you get that person that really needs help.
Yeah.
Because the problem is just like in any business, people call that don't really shouldn't call maybe yet, aren't ready. But that's okay. And just like on the EMS side or on the fire side, people call for things that are not real emergencies. That's what wears somebody down. But then you get the grandma that really needs your help or whatever it is, or you save somebody's life and the family's coming to thank you and to bring you food to the station. You're like, all right, I'll keep.
This is why I keep doing this. But I will say this one thing. Working with you side by side for the last 5 years, but really being, kind of jumping into your business over the last like 4 to 6 months as we kind of pulled our business together. It's making me have to be a better loan officer. I mean, honestly, like, we all get into our egos and we living it up and we're like, all right, we're the best. We're the best. We've done the numbers. Now I'm like really answering my phone. I'm like, Craig would spend another 15 minutes on the phone and explain to you the differences of why you're not doing something. I hear you on the phone sometimes and I'm like, I don't understand. I hear you just say the same thing over and over to 10 different clients, right? And I'm like, I have to come back down to this, right?
So, like, I think why I'm like that is because when I'm a consumer, I want to know. Like, I'm doing work on my house right now, a bunch of different things. And it's like, I'm probably the most annoying customer to have because I want to know, like, why aren't we doing it that way? You might be 100% right the way you're doing it, but I just mentally need to know why it's not, whatever example. Like, why did you, border it this way? Or why did you build the steps that way? Or why is the pitch this much in the patio? Whatever it is, right? I need to understand it. Because to me, it doesn't seem right, but I don't do this.
Yeah.
But I know enough about it. Just like anybody that calls me to buy a house. They know enough about it. They've heard about FHA loans. They've heard about conventional loans. They've heard about down payment assistance. But they don't understand that everybody's situation is different.
Yeah.
They don't understand if I just said to you, okay, you're qualified for an FHA loan at 350, 3.5% down. Well, first thing you're going to think is, why am I not qualified for a conventional loan? Maybe the reason's because your credit's 580 and you can't qualify for a conventional loan. Or maybe it's because the pricing is so much better because of where your credit score is. Or maybe because you don't have enough money to go conventional because it's a multifamily, you need reserves. Like the answers are endless to the questions. Yeah. So I try to really spend just like a little bit of time to give people a couple of nuggets as to why, because what I don't want to happen is I don't want you to just say, okay, you're afraid to ask. Because not everybody's like me, where I'm just gonna be like, why isn't this like this?
By the way, for the record, I would never want to be a contractor working at Craig's house.
Either. I feel terrible for him, honestly. Like it's the worst.
Every time he tells me he's having any type of contractors, landscapers,
I do have some bad luck, honestly. Like it's not all me, but some of it is probably.
I mean, he did call me over the weekend. He's like, my pavers came in a wrong shape. 2 days later, my doors came in different color.
I did have some bad luck, but honestly, the people that that are doing this stuff have done a great job to like fix it all. But I'm not like, as the consumer, I could have got super mad and just been like, I'm out, like get out of here, whatever. But I talked to them, they explained why, like, okay, the sizing was different because there was issues with cracking. Okay, you should have probably told me that, but you didn't. But we moved on. He hooked me up on some other things. So it's like, everybody makes mistakes. I'm gonna make a mistake. You're gonna make a mistake. Sometimes maybe I forgot to tell you that one little thing, but hopefully I give you enough information that you feel comfortable enough to come back and ask me something that maybe you did have in the back of your mind that I didn't tell you, because I didn't think it really applied to you, but maybe you
Maybe it
thought
did.
this was something that you needed to. So I definitely try to give as much information as I can that applies to that person. Based off, I guess I would say like experience of knowing what people actually ask. So I find like now that I do that probably more than when I very, very first started, I don't get as many questions down the line, which really helps me
That's good.
go, with the speed of things.
So I would say since, for the last like 4 to 6 months, I've gone from being mentor to a lot of people in the industry, maybe at Milestone. Externally, I try to help out as many people. But I find myself in this weird area right now, right? And I know that this is not scripted, so I'm going off the cuff, so I'm going to try to throw Craig here for a loop.
None of this is really scripted, to be honest
None
with
of
you.
it ever is. But I'm sitting here thinking to myself, I'm like, I've really turned back into the student. And I would say, without telling you, and now I'm telling you, for the last like 3 to 6 months, I'm really looking at you, and I'm almost looking at you as the mentor, and I'm the student, like getting re-engaged. Not that I was ever out of, the first mortgages or talking to the consumer, but really just seeing how much education and what you do for training to get yourself to that elite level that you put yourself at. So on top of doing everything that I do and on top of everything you do every single day, I got into this recruiting, right? Like, hey, we have to go recruit more loan officers, some more talented people. We're getting licensed in, a variety of different states. So if I sat here and we know each other, what would I have to say to you to get you to recruit you to bring you over to Milestone or over to another mortgage company? Like, I'm just sitting here trying to think, right? So as I'm going into this next phase where we have to start recruiting, we're doing it together. I'm running into some roadblocks every once in a while, like hesitations with a first-time home buyer, right? Like I don't have enough money saved. I love hearing that because those are the people that have 200,000 saved for a down payment, and they're like, we don't have enough, right?
So, I mean, I got recruited for a while and I talked to different people, and I like never really felt like I was 100% confident with making a decision to move somewhere else because I think because of how I am with the wanting to know everything piece of it, I think a lot of people like loan officers want to know more about behind the scenes. And everybody, when they're getting recruited, everybody's always trying to just tell you, oh, yeah, no, we got great process, we got great ops, we got everything. But it's like peel the curtain back a little bit, show people how it works, the pricing, the systems that we have, because not everybody is going to be into that, but they're
Yeah.
probably like, especially I would say in the younger generation of loan officers, technology is such a huge piece of that, and I don't think a lot of people understand how much technology we really have.
Yeah, it's crazy.
When we were talking the other day, and like to me it's crazy because when I started we had nothing,
Zero.
like paper apps, one system, you do everything. Like we were getting borrowers to bring, and this is only 5 years ago. We were getting borrowers to come in to hand sign the disclosures every single time. And I think I appreciate that so much because I think that made me so much better so quickly because I was more involved. Now it's like everything is a lot easier for the loan officers that come in. The trainings are more set up, the systems are more set up, so they're not as involved in the full process, which is tough. But for people coming over, there's a give and take to that because you limit yourself when you are super involved in everything, and having the like support that we have. And then also I think like people need to understand our culture. Like this to me is the most fun place to work because there's there's nobody. I don't think there's anybody here that doesn't have fun, but there's also so many people here in my opinion that look at this place as a family where you're not going to get that working. Like I feel like we have this perfect blend here between the technology, the products, the skills that these big lenders have, but we have the small broker shop feel that's only two or three guys like when we started.
Yeah.
Because we still continue that. We haven't outgrown that, and I don't think we're ever going to outgrow that. Like we're not going to be a Rocket Mortgage or Loan Depot where or Fairway Mortgage where you're never going to have that same relationship. Like I'm at every meeting, you're at every meeting, unless one of us are on vacation or something. Like you're in front of the people that are making the decisions. Our doors are always open to come in and talk to us if you need something. Like I don't think we've ever said no to anybody if it
No.
makes sense. Like okay, let's do this. Let's try to evolve. Like we're always changing for the better, which is fun, and also like we're we're never going to tell you what to do. If you want to run your business one way, and that was what I was really afraid of, with everywhere else was the people recruiting me couldn't even tell me about their systems.
Yeah.
I'm asking questions and they're like, oh yeah. And they're just like, kind of like talking around it. And I didn't have that confidence. Never mind, like with that feel of the family environment that we have here that other places do not have.
Yeah. No, I'm pumped about the culture we have here. I mean, our culture, but it starts from the top, right? You, myself, Rachel. There's a handful of people in the company that have been here since day one, within the first 12 months, that have really set the platform on how we want to do business, how we want to go about it. I almost feel like people come to work even when they don't have to sometimes, and then we joke around with
like to hang out here.
Like I think they just come to work sometimes. Like
I mean, I think too, like you started it, and I learned so much from when I started with you because you were like you're just like generous to a fault. Like you can never say no to anybody. It's always yes. What can I do to help? And I took a lot of that because I don't think I was as much like that. Like I want to help people, I always have, but like whether it's money or whether it's like needing a favor, you're like you have this like third ear out, and I mean maybe because your ears are so big.
Yeah, they're catching up. I mean, they help me get to the moon.
But you'll always hear like it might boggles me because you'll come in and be like, hey, we got to help this person because of this. I'm like, how the hell did you even hear that conversation happen? But that stuff is contagious, and I think everybody here, like one of our guys moves in and you have the top people at the company helping him move into his house.
Yeah.
Where are you going to get that? You need something like it's just the culture side of things with all of the options. And also like we're the biggest broker in the area. There's perks that come to that. You get things that other places don't get. You get to have experiences that other people don't have. You get to go ring bells. You get to take realtors to Michigan to show them this amazing facility.
Yeah.
You get all of these things that you're not going to get at other places. So to me, it's the perfect blend between big and small.
So I'm going to change up all my recruiting, and I'm going to get back out there to the streets and try to recruit based on culture, big and small.
Big and
Big and small. That's kind of how we started the conversation offline with big and small, right, Javi? So I think that concludes episode 13 of the Mortgage Daddies. Thank you, guys.
Thank you, guys. Have a good one.